Hello friends. So friends, we are going to continue with our topic of ratio analysis. And in the last lecture we completed with another set of ratios, that is activity or turnover ratios. Right? This is what we completed in the last lecture. Right? So now we are going to start with another set of ratios that is going to be the final set, that is profitability ratios. So the last set of ratios is profitability ratios. Right? So this is what we are going to start off in this lecture, profitability ratios. Now the first thing is, how many ratios are there under the profitability ratios? How many ratios we are going to study under profitability ratios? The first one is gross profit ratio. Second one is operating ratio. Right? Third one is operating profit ratio. Fourth one is net profit ratio. And the last one is return on capital employed ratio. Right? This ratio is also known as return on investment ratio. Return on investment ratio. Right? So basically, under the profitability ratios, we are going to study 5 ratios. The first is the gross profit ratio, then operating ratio, the third one operating profit ratio, then net profit ratio, and the last one is return on capital employed ratio or return on investment ratio. Right? So now first we'll start with the gross profit ratio. This is the first ratio that we are going to start with. So the first one is gross profit ratio. Right? Now if we talk about this term profit, in the very beginning I told you, see, the main aim of any business is to earn profit. Right? So this is what we are going to identify through all these profitability ratios, that whether our aim is being achieved or not, whether we are earning sufficient profits or not. Because the aim of every business is what? To earn the profits. What is the aim of you studying for your board exams? To get good marks. Right? Similarly, the aim for any business is to earn the profits. Right? Profitability ratios help us in identifying that whether we are earning sufficient profits or not, whether the resources are being efficiently used, and because of that efficient utilization we are able to generate sufficient profits for the business or not. Clear? So gross profit is what? Gross profit says, now first we'll say what are the two parameters between which we have to build a relationship. We should be knowing the two parameters between which we have to build the relationship. The first parameter is, as the name suggests, it is gross profit. Now what is gross profit? We'll discuss, right? The second is revenue from operations, right? So the two parameters for the gross profit ratio is, the first one is gross profit, the second one is revenue from operations. Now first we'll take revenue from operations. What is revenue from operations? We have discussed in the earlier ratios also in detail. What is revenue from operations? This is your total sales, whatever you have earned by selling your product minus sales return, right? This revenue from operations is total sales minus sales return, whatever you have earned by selling your product, right? Subtract if there is any sale return. Clear? Now what is gross profit? The second thing what we have to establish is the gross profit. Now what is gross profit? What is gross profit? Suppose you are a t-shirt manufacturer, right? You manufacture a t-shirt, the cost of which is say 1000 rupees. The cost of manufacturing a t-shirt is 1000 rupees, right? And you have sold it for 1500 rupees, right? This difference of 500 is what? This is your gross profit, right? What is this 1500? This is your revenue from operations. This is revenue from operations. What is this 1000? Cost of goods sold. Clear? You are a t-shirt manufacturer. The cost of manufacturing a t-shirt for you is 1000 rupees and you sold that t-shirt in the market for 1500 rupees. So 500 is what? 500 is your gross profit. 1500 is your revenue from operations. That is whatever you have earned by selling your product. And what is 1000? 1000 is your cost of goods sold. Clear? So 500 is your gross profit, and if we talk in the proper accounting terms, I'll say gross profit is equal to revenue from operations minus cost of goods sold. Right? So what is gross profit? It is revenue from operations minus cost of goods sold. Now what is revenue from operations? This 1500. Whatever you have earned by selling your product, what is the cost? Cost is whatever you have incurred in either manufacturing a product or either buying a product. Clear? Now the thing is how to calculate this cost of goods sold. This we have discussed in detail when we did inventory turnover ratio, right? We have discussed it in detail at the time of inventory turnover ratio, right? What is cost of goods sold? We'll just repeat it once. What is cost of goods sold? It is opening inventory plus if there are any purchases plus if there are any direct expenses, right? Subtract closing stock. Clear? So, opening inventory plus purchases plus if there are any direct expenses minus closing stock. This is your cost of goods sold. I explained it to you with the help of a trading account. Remember? I prepared a trading account where I took, this is opening stock. This is how you prepare the trading account. You add back any purchases, you add any direct expenses. Here you have sales, here you have closing stock, right? Then here you have gross profit. This is how you prepare trading account. So this is all what we are preparing is from the trading account. Opening inventory plus purchases plus direct expenses minus closing stock is what we are getting as cost of goods sold, right? And if from the total revenue from operations, if we remove the cost, right, what is left with us? Gross profit. Clear? I explained you with this example. You are a t-shirt manufacturer or you are a t-shirt trader. The cost of this t-shirt for you is 1000 rupees and you sold it for 1500. So 500 is what? Your gross profit. 1500 is what? Revenue from operations. And cost is what? The cost of goods sold. Clear? So the two elements here are gross profit and the revenue from operations. Revenue from operations is whatever you have earned in totality, whatever you have earned by selling your product. Right? And okay, we'll move further first. So how to calculate gross profit ratio? We'll say gross profit divided by revenue from operations multiplied by 100. Right? So write down the note here. This ratio is expressed in percentage form, right? That how much percent of the total revenue is your gross profit, right? How much gross profit you are earning out of your total revenue from the operations. That we'll find out after removing our cost. So we'll express this ratio in the percentage form, right? Second, higher the ratio, the better it is. Higher the ratio, better it is. Because higher ratio means higher gross profit out of the total revenue. Clear? So higher the ratio, the better it is. Clear? So these are the two factors between which we establish the relationship gross profit and revenue from operations. Clear? This ratio is expressed in percentage form. Higher the ratio, the better it is. Clear? So let's do one or two simple practical problems on this. Right? We are given the data for 2 years, 2016 and 2017. Right? We are given revenue from operations 1,60,000 and 2 lakh. And we are given the gross profit of 40,000 and 60,000. Clear? You have to calculate gross profit ratio for the 2 years. Now what is gross profit ratio? This is gross profit divided by revenue from operations multiplied by 100. Now if we talk about 2016, what is your gross profit? Gross profit is 40,000. And what is your revenue from operations? 1,60,000. Now this means that out of the total revenue of 1,60,000, 40,000 is your gross profit and the remaining 1,20,000 is your cost. Right? Try to understand what it says. Out of the total revenue of 1,60,000, you earned 1,60,000 rupees by selling your t-shirts. Out of this 1,60,000, 40,000 is your gross profit and the remaining 1,20,000 is your cost of goods sold. Clear? So how much is this? 25%. That is 25% of the total revenue is your gross profit. Now talking of 2017, what is your gross profit? 60,000. And what is your revenue from operations? 2 lakh. That means out of the total revenue of 2 lakh, out of the total sales of 2 lakh, 60,000 is your gross profit. This comes to 30%. This means your gross profit has increased from 2016 to 2017. It increased by 5%. This is a very good sign for the business. This means that the various resources of the business are being efficiently used and they are helping in generating profit, helping in increasing the profit. Clear? Now, let's do another problem. We are given revenue from operations. This is 6 lakhs. Right? And we are given gross profit is equal to 25% of cost. Calculate gross profit ratio. This is the only information that you have. Revenue from operations 6 lakhs. Gross profit 25% of cost. Now can you apply 25% on 6 lakhs? No. Because 6 lakh is not your cost. 6 lakh is what? Total revenue from the operations. Now how to calculate gross profit then? Now you are not given the cost. So what you will do, you will assume. So I'll say let the cost be rupees 100. Right? Now can you apply gross profit? Gross profit is what? 25% of cost. 25 divided by 100 multiplied by 100. This comes to rupees 25. Now can you tell me what is the total revenue? Total sales is what? Cost plus profit 125. Total sales is what? This 1500 is what? 1000 cost plus 500 profit. Right? So that's how I can say total sales is what? 125. And here we are given the total sales is 6 lakhs. Right? So you simple mathematics, you can compare the things. So we can say if the total sales is 125, revenue from operations is 6 lakhs, If the total sale is 125, the revenue is 6 lakhs, and what about the 100 then? Because the cost is 100, we have to calculate cost divided by 125 multiplied by 100. Very simple mathematics. Cost of revenue from operations, this comes to rupees 4,80,000. So you can calculate gross profit now. Gross profit, this is what? Cost of goods sold. Clear? So gross profit is what? Revenue from operations minus cost of goods sold. Revenue from operations you are given at 6 lakhs, and what is cost of goods sold? 4,80,000. This comes to rupees 1,20,000. Now you can calculate gross profit ratio. This comes to gross profit divided by revenue from operations multiplied by 100. What is gross profit? 1,20,000. What is revenue from operations? 6 lakhs multiplied by 100. So this comes to 20%. Clear? So this was a bit tricky question that you have to calculate cost of goods sold, and from the cost of goods sold you have to calculate gross profit. Right? So if your revenue is 125, your total revenue is 6 lakhs. Right? So if it is 100, then your cost is 4,80,000. The difference between the two is the gross profit, and from there you can calculate gross profit ratio. Clear, friends? So the main aim of calculating the gross profit ratio is to calculate that out of the total sales, out of the total revenue from the operations, what is the percentage of gross profit that you are earning. Higher the ratio means better utilization of resources, which are thereby helping in generating more profits. Clear? So this is all about the gross profit ratio. Right? So in the next lecture, friends, we'll be doing the second ratio under the profitability ratios, that is operating ratio. Right? And if you have any queries, just send me an email at ksjteaching@gmail.com. Right? So that's all for this lecture, friends. Thank you so much.